Hello everybody and welcome to my channel where I will help you protect your finances to secure your future. Going to show you what I seen in the stock market charts today. Today, again, it was a red day, but it was just another up day in the continuance of our 6 or 7 in a row. What we did today was really just confirm this negative divergence that I pointed out yesterday. We kind of gapped up today. We hit a high, divergent high, and we crapped down. We filled that gap. What essentially we did was came down and gap filled this first one, stopped a little below where the gap was, and came back up. We came back and back tested this major line that I had, and we ran off for the rest of the day. Really just continuing our negative divergence. We haven't hit a high. After hours, we are going up from what we closed. So a test of the high of not the high of today, but the high of this bounce right here, depending on where your momentum is at this high, at the test of this high, will give you more of a indicator of whether you're going to fail this high or keep going. Switching over to the triple Qs, it really did the same thing. It confirmed this negative divergence. Kept going up, new highs with less momentum. It just dropped down, found a level of support, which was this high, and came back up. That would now be a good confluence level of support if we shall pull back. Again, there's nothing really leading me to think, except this 50 kind of rolling over that, but this 20 could blast right through it and just keep us on going up. After we retest tomorrow's high, we'll kind of show you more of what we are going. After hours, we're headed up. Again, with the IWM, the only thing we've been doing is testing this trend line that I have out here. We stopped at it, played around it, and then we popped above it, stopped above it yesterday, gapped, and then came back down, and now we've been tagging it. Ended the day down here. Up after hours. Go ahead and switch to gold. If you have been following me, this is really the top of the green line where I said gold wouldn't get any higher, and I really don't think it will. Found a top early this morning, and hasn't necessarily got rejected, but hasn't blasted above it yet. Our resistance line would really be here down towards 1800. If we go towards that, if I take myself off a log scaling, both of these would be resistance. But the bottom would be down here towards 1600. Realistically, I think that's where we're headed based off the dollar. We'll get to that later. Just can't say it enough. Silver, really just maintaining this out of the breakout. It's up overnight. Seems like everything's really up after hours, but it's really just after it gapped up, kind of coming back down, maybe consolidating for a rest of the gap fill. That's the only thing I can see in silver. We switched to Bitcoin. We got our lines going up. Wish I could grab that one. Got our lines going up. But here we are, just testing these other ones. We may have had a down day today. Just 4%. That's nothing in Bitcoin. Not a divergent high. Our next high will probably be a divergent high. So right here looks like a good time to buy. If you was thinking, kind of not oversold, but getting close down to here, come down, catch a bottom, and pop right back up just to retest this trend. Somewhere closer to 50, 49, 49.5 we'll call it. Switching over to the 20-year bonds. For the last couple days, after I pointed out a daily divergence, they've really been riding this trend up. Haven't put in a daily divergent yet. Still, momentum is riding with this. I really do suspect it to at least hit the 200. 151 by the time we get there. Up after hours, which is looking good. The yields kind of not necessarily following our trend line, the same as the bonds, but still coming down. Yields and bonds are inverse. And switching over to the dollar. This is our biggest culprit. We have a lot of lines here. This one was our main trend from our reversal, our bottom. We came up here, broke this high, made a new high, and we have been falling ever since this new high. Of course, that's going to bring the market up and everything else, gold and everything else. But I was able to pick up this trend line, lots of points, 4, now 5 or 6, and here we are hovering around it. So whether we make or break this will really send a good sentiment, bullish or bearish, to the market, gold, commodities, whichever forth. After hours, the market or the dollar is headed up, but it kind of looks like it's just going to get met by these just to get rejected. It could pop back up. I think it's still got some more to go down, give some distance between the 100 and the 200, and then we'll pop back up to reach the 200. Not necessarily down here, but this was another support level I have out. Another strong support level, 90, maybe there, bounce back up. Switching over to some indicators that we got, the VIX. If you guys follow the VIX, yesterday it hit an all-time low. After hours yesterday, it got smashed down to almost the top of our gap that we have had since March. The March lows, we gapped up, and we have been hovering above here ever since. Okay, from this smash down, we just got a reversal to the 100 on the hourly, and here we are. The 20 came above the 50, the 10 is still slanting upwards, up toward this 200. Give it a couple days of back and forth. But watch these, because if this spikes forward, market's going to fall. Maybe the market falls and this spikes with it. Whatever correlation it's looking like, the greater market has negative divergence, and this looks like it's coiling for a move up, possibly. So take that as you will. Same thing with the UVXY. This is just another one to follow. Here we are coiling after hours. We're down, yeah. Let's say you pick it up at 10 on the dot and break out. 100 slanting up, 200 slanting down. Gives us something to aim towards. Switching to the put to call ratio. If you want to look at this one, started the day all the way down here with a bullish sentiment. Plenty of calls as compared to puts. Everyone was expecting it to go higher, which it did. It gapped, and then it shot up, and then instantly went all the way to the bear side. And we rode the bear side of this put to call ratio till from noon on. So over half the day we were up here. If you were to act inverse of this, is what I've learned and been told to, that would give us sentiment to head higher in the overall markets. After hours is showing that we are in a buy the dip market because of the trend is your friend till the end, all these retail investors, like I could go on for days, but buy the dip. If you would have bought the dip today, you would have came out fat. So you buy the dip until proven otherwise. You ride the trend is your friend until she's not. Okay? The fear greed indicator, I believe we are at exactly where we were yesterday. 57? Oh, a little bit higher. So the greed rose and we were really flat on the day. So more money being pumped into it. I will get a bear to bull sentiment, a bear to bull ratio along with my fear greed next time. That's a good one to always look at because when that switches over to not necessarily more bulls but less bears and less neutral, most of your money is in the market, and that's when you can expect a rug pull. But that's what I have for you guys today. Hopefully you got something useful out of this. Please leave me a like and a thumbs up. And you guys have a good day and good luck.